Hello, hello, hello. How's it going, everybody? Welcome to a Capital Hungry Monday Market Update and Trade Ideas webinar. Through the next 30 to 40 minutes, I will be breaking down current market fundamentals that are impacting the main trading instruments that we look at day in and day out, as well as technical and overall fundamental analysis on gold, GJ, GBPUSD, EURUSD, USDCAD, US30, and overall market sentiment analysis, as well as looking at what economic events we have on the table as well. Okay, so we're just going to be jumping right into it. I want to keep this pretty short and sweet, just packed with information, the analysis, and then the trade ideas, of course. So some recent fundamental points that we have to keep in mind, especially as we're trading some of these currency pairs, equity markets, precious metals such as gold, is we do have a bit of a slowdown in volume and overall volatility as we're coming towards the end of Q1 and the end of the month. Of course, we had some very large moves, for example, like we saw on GBPJPY and other yen pairs, but this was primarily induced due to the Bank of Japan's unlimited bond buying program over the London session, which was obviously brought some short-term weakness to the Japanese yen. But because volume is lower now as we are coming towards the end of the quarter, we didn't have the order flow within that Japanese yen weakness to sustain the moves, hence why we had those deeper pullbacks. So keep in mind that we can see potential order flow rebalance or just a slowdown in volume as we're of course coming towards the end of the quarter and the end of the month. Of course, the Russia and Ukraine tensions are still actively going on, and it has not come to any solution point or has not come to a halt yet. But in terms of market impact, when we're looking at the eyes of smart money, the market makers, the 1%, whatever you like to call it, the tensions have been priced into the markets. All of the tensions with Russia actually invading Ukraine, the physical damage to infrastructure, the economic sanctions from NATO regions and the escalations of those economic sanctions, all of that has been priced in, okay? Same thing with a lot of the interest rate decisions by various central banks, such as the Bank of England and the Federal Reserve. The 25 basis point rate hikes have been priced in, and they're doing literally minimal to actually bring down inflation. So we're seeing the stock market continue to chug away on the greed train as a lot of the fear, uncertainty, and doubt with Russia tensions have been priced in, interest rate decisions have been priced in, dips have been bought up on the equity markets, continuing to extend that greed train wealth, and as we're having those equity markets continue to squeeze that upside to close off the quarter. The focus this week in terms of economic data is on GDP and PMI figures globally from different countries. More importantly, I'm looking at US GDP this week. And for those of you wondering why we had that huge upside move, almost 300 pips on GBPJPY overnight, that was due to the Bank of Japan providing further stimulus for their economy through their unlimited bond buying program at specific fixed prices, which of course devalues the currency in the short term. But the Bank of Japan is perfectly aware and is actually looking to short-term devalue the Japanese yen because it promotes their international business activity, especially with import and export. So, with those recent fundamentals in play, the market timing and so forth, we can see the US dollar is back to being bullish, sitting at its intraday highs after having a consolidation phase for an extended period of time. In the short term, just over the last week, we are playing some short-term weakness on the US dollar, just as we were ranging at the highs, failing to break higher, with of course the interest rate decision being priced in, and no new fear coming in with the Russia tensions. Now we're looking to jump back into our dollar bullish bias, especially when I show you the dollar index individually. Japanese yen is extremely bearish individually, even though we had an aggressive pullback move after the Bank of Japan headlines overnight. Japanese yen is still very bearish when we're looking to trade our XXXJPY pairs, and our global equity markets are still very bullish across the board. So we're still playing that sentiment of the fear, uncertainty, and doubt being priced in, and markets more optimistic across the scene. We can see that across the board with various regions, how equity markets are very bullish in intraday structure as stock market greed train is trying to extend higher, showing us more confidence in those respected regions by investors. And we can see how the volatility index individually is bearish. Japanese yen is just dead, but after this consolidation phase, we're starting to see a lot more life now on the US dollar on the intraday time frames, especially if we can break above these high points and validate more dollar buyer volume active in the market. So we are going to be in the short term still looking to play strength in the equity markets and weakness in VIX, weakness in the Japanese yen, and potential further strength coming into the dollar, especially if we can break above those intraday high price points. Now, like I was talking about, those headlines we got overnight explaining the Japanese yen weakness are shown on your screen in this little newspaper snippet. At March 28th, 3:08 a.m. Eastern, BOJ announces for first time plan to conduct consecutive unlimited bond buying. This means they're looking to increase the supply of Japanese yen within the global market and within the Japanese economy, and take that increase and escalate the asset purchase program and buy more bonds. This is weakness for the Japanese yen and strength for the Japanese stock market, but Japan doesn't mind having a weaker Japanese yen, as a current weak yen is a positive for Japan's economy. Okay, so this weakness in the yen and the upside on GJ for what we trade as manual retail traders, fundamentally from an economic standpoint, the current weakness in the yen and what the Bank of Japan is doing with their asset purchase program and unlimited bond buying operation, even though it's making the currency weaker, it's a positive for their economic activity on a global scale. But this makes it easier for us on a fundamental perspective to continue playing that Japanese yen weakness. Also, we just had some headlines obviously reflecting on the Ukraine and Russia tensions, as Putin does not appear ready to make compromises to end the Ukraine war. We also saw further escalations with NATO regions and Biden itching to jump in the scene there, but obviously no new events of escalation that have brought any market fear. I personally don't think we're going to get any new escalations with the Russia and Ukraine war until after the new business quarter starts to start off in about a couple of weeks from now. In about a week or two, when the new quarter order flow is starting to set up in the market, I guarantee you're going to start to see more military escalations by NATO regions starting to push the bear with Putin, and then obviously Putin escalating from his standpoint, and then we're going to see new market fear brought in with the new quarter. I promise you that. But for now, a lot of those tensions are very quiet. With volume and volatility, as we're coming towards the end of the quarter and end of the month, and of course as a lot of the fear tensions have been priced in, volume and volatility has been a bit lower and slower. This is the reason why you can have very large aggressive moves but equal size pullbacks where the moves aren't getting sustained to extend a lot higher. This is showing us that in that situation, volatility was higher when we're looking at GJ, induced by a fundamental catalyst of that Bank of Japan headline, but volume wasn't high enough to sustain more buy volumes to continue up higher. We're still respecting bullish market structure, but we can see as we've been making our way to the upside, it's been a lot more corrective, a lot more aggressive pullback waves on the intraday time frames. Same thing when you're looking at gold here on the intraday time frames, as we're really just starting to range, not showing any significant strength between buyers and sellers. Same thing as we were watching the dollar range. Equity markets have been in this range for an extended period of days now as well. As we see technical ranging across the board, at the same time a lot of the fundamental catalysts have been priced in, more aggressive pullback plays or consolidations, and we're coming towards the end of the quarter, it's very easy for us to note that we can see that lower volume and volatility. The reason we want to highlight this is as manual retailers, retail traders, we have to adapt to this volume and volatility accordingly. Meaning when volume and volatility is lower and slower, you're having more consolidations on the higher time frame, aggressive pullback phases and corrections of impulsive moves and equal corrections. It really shows you to stay adaptive, grab your quick jabs at the market, and get out and sit on your hands and wait for better opportunity. These conditions where we're coming towards the end of the quarter aren't the best for holding day trades or intraday trades or trying to swing trade in these markets. You know what I mean? I think we're going to get a lot more healthier volume and volatility, of course, when we're coming into the new quarter and we get some new fundamental catalysts with the Russia and Ukraine tensions coming into play. Before we jump into the technical analysis and trade ideas now across the pairs, bringing together those fundamental points, correlations, and understanding of market sentiment, we just want to have a good understanding of what economic events are on the docket. So just from here, Asian session up until tomorrow morning, this is what we're focusing on. Through the Asian session at 7:30 p.m. Eastern, we have Japanese unemployment rate and jobs applicant ratio data. In my opinion, this might lead to a short-term upside pullback on the yen, but really just to set up more seller order flow and keeping the Japanese yen individually still very bearish, meaning we still want to play XXX buys, GJ buys, EURUSD buys, and so forth, okay? Also in the Asian session at 8:30 p.m. Eastern, we have some retail actually this is at 7:30. Okay, then at 8:30 p.m. Eastern, we have the Australian retail sales for anybody who's trading AUD pairs. I personally don't trade any AUD pairs, so this isn't as relevant to me, but I still like to know what major currencies have economic data in case of any market sentiment impact. But for anybody trading AUD, the expectations are weaker retail sales and a decline in that data. Then, overnight through the London session, at pre-London hours 2 a.m. Eastern, we have import prices data yearly and monthly and consumer sentiment report from Germany. All this data is expected to be poor. This is good in terms of our bias on EURUSD, where we're expecting to jump back into the sell side structure. Same thing with the consumer confidence for France at 245, expected to be weaker. But this can keep EURUSDJPY ranging on the intraday timeframes, as you have that little bit of a fight of which currency is going to be weaker in that moment. But we are expecting some weaker data with this euro from 2 a.m. to 3 a.m. Spain retail sales yearly at 3 a.m. Eastern. Then at 4:30 a.m. Eastern, we have mortgage approval data, mortgage lending data, and consumer credit information from the Bank of England. This isn't really going to have too much of an impact on GBP, but just keep an eye out that if you're in a scalp at like 4:30 a.m. Eastern and you see a quick lower time frame spike in price, it could be most likely from this data having just a minor, short-lived lower time frame impact. Okay? With March 29th here, 9 a.m. Eastern, we have some Case-Shiller data for the US, but more importantly at 10 a.m. Eastern is the JOLTS job opening and consumer confidence. For anybody who has more questions about specific fundamentals like the Bank of Japan bond buying impact on the yen and why it's bearish, I suggest you go watch Capital Hungry educational webinars or join the Capital Hungry private channel where you can learn more in depth about those concepts. But through this session, I just like to be very informative for the 20 to 30 minutes that this session goes on, so I can give as much information about current fundamentals, current news, current economic events and technicals, as well as current trade ideas for people to execute on over the next sessions. I don't really want to make this a long rant for me to go into describe and discuss what the bond purchasing program really means in in-depth detail. That's a whole webinar for itself. I don't mind doing that, but it's going to make this webinar way too long, okay? So, consumer confidence, JOLTS jobs opening, expecting a bit weaker data here, could keep the dollar relatively a bit softer, not just breaking those highs right away, but I am still more jumping on that dollar bullish bias. Now, When we're looking at gold here on the intraday time frames, we have to understand when we're looking at the volume and volatility that when we had the Russia and Ukraine tensions, this is the daily chart right now, everybody, we had this huge upside increase in price from $1,800 an ounce all the way to $2,080 an ounce. Previous all-time highs on a surgical dime there. Exact spot ping on a dime, right? So what we have to understand is the market moves in waves, and the buyers who are flooding the market with these buy orders, the same time we had that market fear, uncertainty, and doubt when gold was pushing up, the equity markets were weaker on the short term. Let me show you this here. Right? So the same time gold was having that bullish rally, equity markets were of course weaker on that fear, uncertainty, and doubt from the global impacting factor of the Russia and Ukraine tensions. What we saw was a major outflow of liquidity in the equity markets on that fear, and in my opinion, that liquidity in equity entering gold as a precious metal safe haven and as a hedge against that fear risk. As we had gold explode, a huge amount of profit made on this percent change in price on gold, all the way up to these all-time highs. Conveniently, a lot of the Russia and Ukraine tensions got priced in, and the US 30 equity market made a very nice dip at 3,200 flat area. Then we can see massive amounts of profit taking by buyers on gold at this exact same all-time high, and it looks like the smart money market makers took that buyer's profit and at the end of the quarter coming up right now, flooded it back into the equity and stock markets. Does that make sense to everybody? We saw when the fear, uncertainty, and doubt was relevant, the shift in changes in institutional order flow, the outflow in liquidity in the stock markets on the fear, uncertainty, and doubt, and the inflow in liquidity in gold as a precious metal safe haven. And roughly the same time gold peaked those all-time highs and we saw a massive amount of liquidation of buy orders and profit taking, it looks like the buyers took that profit that was earned in the gold risk hedge right there and pulled it right back into the stock markets from this dip low area here. Does that make sense for everybody? So we have to be very careful with the gold as it's ranging at these highs. I still see equity market buyers trying to squeeze out what they can out of the stock market. And as we have a lot of the Russia tensions priced in, we can see this daily candle on gold actually ended up closing bearish engulfing, canceling out 3 days of bullish price action, closing back at this flat candle body support. With the fact that we're coming towards the end of the quarter, US dollar holding some short-term strength, this bearish engulfing candle, if the next daily candle in terms of order flow just grabs some liquidity and starts to break below the 1920s, we can easily see some revisitations down to the 1880s when we're looking at gold here, especially if we see a continued amount of liquidity inflow into the stock markets and a continued outflow of gold breaking below the support in demand zone area, right? So gold was still respecting bullish market structure above that 1920, 1910s price point. You can see we had this pullback as buyers took profit from these highs, a support being created in a very nice bounce from this area. But 3 days of bullish price action just got canceled out in a singular day. It looks like we're getting aggressive profit taking by buyers to close off the quarter, where we could easily get deeper pullbacks to revisit these previous high price points for the new quarter before seeing the buyers back in play on gold. Okay? So I am starting to see a lot more sellers pressure developing. But for us to really take safe sells, we need breaks below this price sensitivity area here from a technical standpoint. Right now, we're just in that intraday consolidation. So these are the effective trade ideas I personally see on gold. I was watching this intraday bullish market structure that we were seeing play out here, right? We're starting to create some stronger lower time frame bearish market structure as well. As you can see from this rejection at 819.65s, stronger bearish price action. This bounce that we had at New York, we took advantage of it in the Capital Hungry private channel with the market update, but it was very short-lived with the daily candle now closing below the previous intraday low, showing a lot more sellers price action and bearish market structure on the lower time frame, with a lot more liquidating of positions by buyers there. So if we were to pull back to 1929 and fail to break, or break below 1912s, I can see us continuing some of these sells to the downside here on gold. Obviously keeping in mind this intraday range we are still in. So if we come up to 1929, fail to break, or break below 1912, I would see some potential sells back down for deeper pullback plays on the higher time frame, safer sells if we break this 1912 and 1910 demand zone. Okay, I would only be jumping back into gold buys if we were to break above this rejection area here, because we have to understand the movement of order flow. What we had here was buyers extend us to the upside, then some profit taking here from 1965 and sell orders jump in the market. This was looking like we were still respecting bullish market structure until we came to 1939, collected more sell orders from this price point on the lower time frame that printed new intraday lower lows. So when you're looking at roughly 1939 here, you can see that a lot of sell orders were collected in this area, and from there we've had very strong bearish price action, right? Looking like the buyers are starting to get faded out as we're coming towards the end of this quarterly period here. So pullbacks to 1930-ish and fail to break, coming back below 1923 or breaks below 1912, I'd see some end of the quarter potential deeper pullback sells, playing this bearish market structure accordingly. Okay? These sells would be invalid and I would jump back in buys only if we broke above 1939 key level, where from this area where we had a low printed, we had a pullback to collect more sell orders and a lower low printed by the end of the daily period. I would only jump back in safe buys on gold if we broke above 1939. This is the main bias expectations with the slowdown in buyer volume, stronger bearish price action, playing that higher time frame range with the potential to revisit 1912, then watching 1912 as a make or break area. And of course, coming towards the end of the quarter, I would only jump back in buys with breaks above 1939.5. GBPJPY. If you have been following the last week's market updates and of course the New York scalping session hosted for free on the YouTube, you would know we have been in a bullish bias on GJ, especially as we fail to break this higher time frame demand zone. The fear, uncertainty, and doubt with Russia got priced in. We had a more hawkish Bank of England. We broke above these intraday highs. And then we had the Bank of Japan bond buying headline that led to further weakness in the Japanese yen. So we have a multitude of confirms with strength in the UK equity markets showing investor confidence is still high within that region from an economic standpoint. Japanese yen individually bearish, bullish price action and higher time frame market structure overall. The fear, uncertainty, and doubt with Russia and Ukraine being priced in. Very strong bullish price action with us to be filling up these ranges to the highs. Very nice bullish market structure on the intraday time frames as well. With GJ here, I'd be keeping it very nice and simple. And if we were to get any new daily candle pullbacks to 161.5 continuation buys, breakouts above 162.5 buys, and even any deeper pullback scaling back to the upside, meaning if we get this deeper pullback, potentially double bottom in this area and start to make our way back up, scaling back up buys accordingly. There's no reason for me to fight the trend on GJ. We had buyers print new intraday highs, a pullback phase that occurred. The pullback phase was not breaking bullish market structure, very similar to any times we've had buyers print highs. You can have a short-term pullback phase as the buyers take profit and liquidate positions from the high points, or a consolidation phase. But that pullback phase never breaks the overall broad bullish market structure. The same time Japanese yen is bearish and global equity markets are bullish, and we always end up having buyers come back into the market to revisit the high points and also extend up higher, right? Very nice bullish price action, bullish fundamentals with weakness on Japanese yen from the unlimited bond buying program. Bullish price action and fundamentals on GBP with a more hawkish Bank of England, and of course bullish market structure and very nice intraday price action for us here to play. So I'd be looking for new daily candle pullbacks, continuation buys, at least trying to target 163.5, 164. GJ is going to be a lot different than GBPUSD because the secondary in the currency pairs, this being the yen and GJ, of course in GU being the dollar, have individual separate opposite movement. Yen by itself, when you're looking at the yen currency index, is extremely bearish, right? Very easy to see. This is like the 4-hour chart here. Dead bearish, right? We are, one thing I want to show you guys though on the Japanese yen is we are coming down to 2008 historical lows. This is just one thing that we have to look out for, that we might not break this area right away and we can get a very aggressive bounce from this area. Yes, we've been playing this yen weakness for months, but we have to be very cautious that we're coming down to 2008 and 2014 historical lows on the Japanese yen. Okay? So that's just something we have to look out for. But overall, in the intraday time frames, it's extremely bearish. We might get a potential aggressive bounce from here, which would lead to a pullback on our yen pairs. But overall, yen is very bearish. But the US dollar, though, on the other hand, due to its individual fundamental impacting factors of a more hawkish Federal Reserve, is very bullish. Every time we have buyers print highs, we have a consolidation or a pullback phase occur, right? Market structure is the same no matter what you're reading, no matter what pair, trading instrument, or whatever it may be, right? We had the same thing happen here. We had buyers print highs, a pullback phase that did occur in consolidation for an extended period of time, but more buy orders being collected from this price sensitivity area. Now, if we break above these highs, we can expect us to just continue to play with the overall bullish trend, right? So with our dollar pairs, GU, EURUSD, USDCAD, we are looking to start to adapt to some potential dollar strength. What would be even more confirms for us as manual retail traders to take advantage of dollar strength would be dollar index breaking out above 99.2. Behind the scenes of the chart, this shows us a lot more buyer volume flooding the dollar, which we can correlate to GU sells, EURUSD sells, and UCAD buys, right? So yes, dollar's bullish, but would really signal a lot more dollar strength for us to analyze from a technical perspective and retail perspective is a breakout above 99.2. Shows us a lot more buyer volume, okay? I don't think it's the best time to send a quote from the Bible during a financial market analysis and trading webinar you're watching. A little bit counterproductive. So GBPUSD. GBPUSD, we were just playing short-term pullbacks as sellers printed new lows, and the dollar was obviously having that pullback. But we can see a lot of this is starting to get faded out of the markets, but we're coming back down to the exact same potential low points. I do see that we can still fill this range coming all the way back down to 1.30 flat. Very similar situation. Let me show you guys. To like this. Look at this piece of market structure here and this here. Yeah, we might get a bounce from the lows if we don't break right away, but what we saw happen right now is a seller's impulsive play lead into new lower lows, a short-lived extended pullback play, then sellers drive back down to these lows almost on a dime before seeing a potential bounce or watching here as a make or break area, right? So with the current strength in the US dollar and of course this current bearish price action and market structure, if we can extend and stay below 1.314, it does look like we can at least have similar technical repetition of revisiting this low point. Does that make sense to everybody? We can even have the potential of breaking down lower, like a situation like this here. Let me show you guys again. Let's look at these multiple scenarios here, right? I want you guys to look at this structure here, this structure here, also this structure here. Okay, so same idea. Higher time frame sellers in control. As you have sellers print new lows for that period in time there, you can see from those new lows, you do have some type of pullback as the sellers liquidate some positions out of the market, dollar fades out some strength, and it creates this pullback, right? I'm trying not to laugh at the Bible thumper in the chat right now. This is a market analysis stream, my friend. Maybe go to like some Christianity stream and go spam the chat all you want, bro. You know what I mean? You probably are saying this and have a Pornhub tab open. Probably saying this and got UJIS open. It's not going hand in hand, my friend. But anyways, you can see with some of these short-lived pullbacks, you at least fill the range of revisiting these low points, right? Now, if we break lower, like for example here, where we just extend even lower, that's going to be something we have to watch as we come to this previous low price point of interest, okay? But I do see that if we don't correct this bearish engulfing candle, minus a pullback, we can at least start to revisit these lows, especially if dollar index continues bullish. Okay, everybody? So, if we come back to retest 1.313, I'd be looking for sells, breaks below 3085 sells. Targeting 1.304, 1.30 flat. Looking to retest these previous lows that we broke, correcting some of this impulsive move and collecting more sell orders. A lot of exhaustion by buyers at these highs, starting to form some stronger bearish lower time frame structure here, which would line up with this retest area, playing some of the sells to the downside. I would only be jumping back in GBPUSD buys above 1.321 key level. We would need to have US dollar extreme weakness and a break above 321 for me to see some more bullish strength in GBPUSD individually. Okay. Euro USD, very similar idea. If we can break below all of this noise you can see here and still have some short-term dollar strength in respect to this structure, we have a very nice range to play on the intraday time frames. Whether you want to scalp just some of this range or try to take a day trade, we can of course go to revisit these previous lows. Now this situation here is looking very similar, right? I want you guys, just for visual representation, like we looked at GU, look at this chunk of market structure and this chunk of market structure. Okay, now look at a few things. One, low printed by sellers. Low printed by sellers. New low printed by sellers driving down into the low, right? Two, a pullback phase that does multiple retests, double top here, of a similar price sensitivity area. Here being the retest of previous lows, same exact double top, right? Three, a bit of a support being formed in the middle of the range. A bit of a support being formed in the middle of the range. Four, some stronger intraday bearish structure that forms. Some stronger intraday bearish structure that forms. Five, if we can break below here, very nice range to revisit this low point. Does that make sense, everybody? Right? So here it's very messy, but if we can break below all these wicks and price sensitivity area and confirm that dollar strength, it's almost looking like an identical move of technical repetition, playing the higher time frame bearish market structure, as well as having some target points of these previous lows, and of course some fundamental confirms of dollar bullish strength on our side. Right? Hopefully that visual representation and color coding on GU and Euro USD helps to mark that out a bit easier. Of course, we have tons and tons of noise in the way in this price sensitivity area, and overall here, very messy ranging. So to keep it very simple, if we were to get pullbacks to 1.04, I'd still be looking for sells. Safest sells, 1.093 break. I would only be jumping back in buys, similar confirms to GU, with breaks above 1.11, with confirmed dollar weakness, or any individual fundamental catalyst that can bring euro strength. But remember, don't forget, I'm expecting some weaker euro data overnight. They're medium-term reports, but still, weaker euro data overnight. Even later in the week to close off the month here, how many days are in March? Never mind, 31 days. The day before the end of the month here, March 30th, I'm expecting weaker consumer confidence figures, economic sentiment, everything with euro. I'm expecting weaker. But we'll see. In terms of those are the sell ideas, I'd only jump back in a bullish bias and see buyers in control with a break above 1.11. Now, USDCAD. With potential dollar strength coming back into dollar index, we can see USDCAD came exactly the same, came down to these exact same previous lows and failed to break so far. Okay? What we can also see is we have the potential, when you're looking at the similar repetition, that we can revisit these low multiple times. This means from a technical standpoint on USDCAD, this is a very key make or break price sensitivity area for us when we're looking at it based on the key levels as well. Okay? If we come down to these lows, fail to break, then come back above the key level 1.25, buys on UCAD. Buys above 258, buys above 26. So not buying right at the low, no. Reject the low, come back above the key level, gives you more confirms, scale up accordingly. I would only be jumping in sells if we had intraday candle closures below 1.246. Otherwise, I'm starting to see dollar buyers come back into play, sellers exhaust out from these previous lows, potential for a revisitation and double bottom here, and buyers jumping back in the scene. I would only sell below 246. This is my main bias. US 30, as explained in the start of the webinar and earlier, very nice bullish price action and market structure. Buyers grabbed this dip up at 32K flat. Interest rate of 25 basis point was priced in. Fear, uncertainty, and doubt with Russia tensions are priced in. Breaking above the bearish market structure with an order block here and a lot of buy orders generated. And we've been in a bullish buy-in since 33,200 if you've been following the webinars. You can see we've just been in this intraday consolidation phase in order block, but retests of 34,600, breaks above 35K, buys on US 30. I would only sell with breaks below 34,300 and new market fear, uncertainty, and doubt that we can take advantage of. Okay? Otherwise, those are the trade ideas. Remember, we went through what fundamental points we have that are impacting the markets in terms of real world catalysts, economic events, market timing as we're coming towards the end of the quarter. We went through market sentiment analysis, some key news headlines, a volume and volatility reading, more in-depth analysis of global equity markets and sentiment, individual analysis on dollar, yen, and VIX for correlations, and then of course individual trade ideas on gold. GJPY is already going up, GU, EURUSD, USDCAD, and US 30. Remember everybody, I'm not a market wizard. I just try my best to share what I have learned in the markets and give trade ideas. I know a lot of people depend on my trade ideas, but try to learn as much as you can. Follow your risk management and trading plan. Focus on the probabilities and long-term vision, and try your best to control emotions. Have responsibility and accountability for your own trading. All right, everybody? Hopefully you guys enjoyed these webinars, very informative and educational. I'll see all of you Wednesday for the New York scalping session. Make sure you follow all of the Capital Hungry free resources. The news Twitter, 30,000 headlines posted, posting Twitter headlines every single day. Free Telegram analysis channel. Hundreds of webinars on the YouTube page that are better than any mentor, any service out there, guaranteed. If you want more than that and you want to learn exactly what's in my brain and copy exactly what's in my brain, you can join the private channel and pay more for my time and value. All right? All right, everybody, take care. Have a great day. Rewatch this as you wish. I'll see all of you next time.